The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Well, we're off 20 points on the S&P cash. Dow's off 30. The Nasdaq's down 21. And, of course, we dropped about 10 points fairly quickly because Mr. Trudeau from Canada, I will blame Canada for the last 10 points down anyway. Retaliatory actions, what does this say? Totally unacceptable. Oh, I'm scared now. So we're going to have our little tits and taps. But for, I don't know, probably 20 years, the State Department has run our trade program. Now the president's running it. And there's probably a little bit of politics into the timing of what's happening. It's not uncommon to see whoever is in power try to get all the things out of the way before midsummer or late summer. So I would expect or would have thought that from the Chinese to Mexico and Canada, these guys were probably dragging their feet, knowing that if they could drag their feet long enough, that nobody wanted to get into this come election season this fall. Time to actually push the issue for the U.S. administration. So kind of went out there and did our little dance today and told everybody, well, we're going ahead. You guys had your chance. And now they're all sniping back. And, of course, this is the quote trade war everybody is so worried about. Pretty minor, small potatoes stuff so far. But I think everybody's been so scared of this. This is like telling a little kid that the boogeyman is down the street. Keep telling him. And his ball goes into the yard of the boogeyman down the street, the creepy old man. Everybody's afraid to go get the ball because everybody knows that guy's creepy. Everybody's been told. And, of course, somebody doesn't know it, goes in, gets the ball, finds out the guy's just kind of maybe just a hermit. It's not as bad as we thought. Anyway, my guess is that they're going to push the issue over the next few weeks to get this resolved probably by February or by July. So just get into it. Saw a lot of stocks, as we said yesterday. I already said that we had two short positions in the daily newsletter. Added a third this morning. And I'm going to have to really see something out here that tells me something different. This does not mean I think that the market's going to hell in a handbasket. It is going to pull back for a while. And I think we're probably going to have some very good buys for a very good rally going into this fall. Everything's actually doing fairly well. We do have some problems that could become bigger market issues. But again, I think from whether it's the NAFTA people here on this side of the pond or whether it's Germany, those guys are fairly weak right now. The U.S. is pretty strong. If we're going to press our advantage in trade, this is the time to do it, whether it's China or Germany. And just kind of opening salvos out here to get trade back in line. At least some people would believe that. But, we've had 20 or 30 years of go along to get along. And trying to get sometimes, I forget who used to tell me this story, and I don't remember the story right off the bat, but it had something to do with a donkey and a 2x4. And the 2x4 was get the donkey's attention. Not that I'm advocating beating on donkeys. I just remember the story. And I think that's kind of it. Now, for anybody that's not dug into Trump's book on negotiation, I've heard it several different ways. He basically says it the same thing. But there's the old story of two guys, and they're haggling over the price of a car. Guy says, I want $5,000 car. The other guy says, I'll give you $4,000 for the car. And the guy selling the car goes, you know what? Let's split the difference and we'll make it $4,750. And the guy goes, well, that's not half the price. He says a log doesn't always split even. Now, we're not arguing over $4,000 anymore. Now we're arguing over $4,750. And the lesson is that you change the argument if you want to win the battle. And that's what's happening right now. We're changing the argument over that there wasn't fair trade to what is the resolution of this disagreement going to be. And it's going to take a little while. The one thing that people love to do in I want to say diplomacy, I think that's the right word to use, is that whatever they can do to drag their feet and make it slower is what they like. I don't think you're going to get Mr. Trump to do that. I have a feeling he is like a bull in a china shop, and they're all going to have to get used to him. Anyway, we're off at 20 points. Again, I think that this weakness, however deep it gets, could continue into the 4th of July. By then, it will be kind of difficult because any kind of big pullback will start to weigh on this fall's elections. So my guess is that this will be pretty short and sweet, maybe the next 4 weeks, maybe a little longer. But my guess is it actually gets resolved a lot quicker. Everybody's got a lot more to lose than we do, from China to Japan to Canada and Germany. They've all been able to gang up on us, and we're in kind of a rare position to actually kind of press the issue. So we'll look at that. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den.
Then it's all just a little bit of history repeating.
On this day in 1919, Sir Arthur Eddington led a team in Africa to observe a total eclipse, while another team observed it in Brazil. This was to prove Einstein's theory of relativity, that if we could get the sun going by stars, that we could see the relative position of the star move. Now, the problem is, of course, the sun's too bright, so we have to wait for solar eclipses. And that's what they did, both on South America and in Africa. And what did they see as the light of the star came by the sun? It moved, proving Einstein's theory of relativity. It's actually another theory of relativity. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
2707 on the S&P cash. 2710 was kind of the line in the sand that would bring more weakness. Now, of course, we're into fund buying, although I think about half that money for fund buying came in yesterday. Everybody wanted to buy when it was at the lows. So we're probably going to have a few days out here with at least some minimal support and cash still coming in. The big question would be how this market starts working next week. Today's the 31st. So we've got Monday. It's the 4th, right? So you got, technically, that's really kind of the last day for most of these companies, although I've seen them take it into the 5th. So Tuesday would be kind of the last day for these guys to do it. If they haven't spent their money now and they're seeing the market going lower, they may drag that money out. So you may see a bounce as late as the 5th. Keep an eye on it. As I said yesterday, a lot of stocks I was looking at were running into pretty significant resistance levels. AMD was one of those. 1385 was the last high on January 31st. It did so on 140 million shares. And yesterday got into it 58 million shares. Now, I'm not short this one, and I'm not going to be short the next one that I looked at. I found stocks that I thought were much better, longer term shorts to go after. The energy on the way down was about the same as the energy on the way up. So these kind of look like they're in trading ranges. So you want to wait for these things to pull back. I wouldn't be short them. But AMD, MU, both of these stocks hit highs on ridiculously light volume. Micron's was $63.42 on March 13th with 142 million shares. Got into it with 84 million shares yesterday, gap down. Now, it got a little help from some people in the stock market that wanted to make some quick cash with a downgrade today. But energy is about the same on the way down as the way up. So I can't really say that this thing's ready to fall apart. I can say that it's probably in this trading range, and I don't know where this thing finds a bottom. But you could, while you don't have to, could see some bounces out of these levels. The bottom of this first gap is at about 54, and the bottom of the second gap is at 52. And then, of course, you go down to 45.32, which is the April 30th low. Now, one of the reasons I would suspect that we're going to see weakness continue on is just the huge amount of ads that I've seen over the last week and a half for hard drive, especially SSDs, and regular hard drives too. That whole sector is fairly weak right now. But the pricing on the SSDs is, I mean, significantly lower, 30–40% lower than a couple weeks ago. So there are some fairly massive deals on 1 terabyte, 2 terabyte SSDs. And that tells you one thing, and that is that memory is getting cheaper. There's some other reasons that you want to be out there, but you can't, I mean, if you're in a company making what is basically piece of plastic with a controller on it and a lot of memory, there isn't a lot of black art into making one of those things. It's getting the chips, putting them on the board, and getting them out the door. There were a lot of things in spinning hard drives like ballistics, moving the heads. There was a lot of black magic in getting those things to work. At this point, all the black magic is in the controller, which has been pretty much figured out over the last few years. And of course, the memory chips themselves, which are all kind of a commodity. So Micron in a kind of a commodity business. I like the long term on this. I just think that you could see certainly 52s back down to, depending on how bad this gets, down to 45, 32, which is that previous low out here. You'd love to see this thing come back to that $45 level with light energy and light volume. You never quite know what that's going to happen, though. Somebody has, I don't know what they want me to do with it. This says GS Head and Shoulders. Let's take a quick look. I mean, a lot of these stocks do look like there is maybe some kind of risk, counterparty risk from Deutsche Bank, the way that they are trading. What you don't have, well, let's do this a little bit more. You know, you do have a decent amount of energy. Let's go to back to a smaller time frame here. Do you have a fair decent amount of energy on the way back down? You did go through this gap today, or last couple of days actually, which goes back to what is this? September 27th of 2017. You needed less than 3 million shares, and you got 5.3 million shares. So, you know, what that opens up is this next gap, which is at about 215. That gap also has a low at 213 right below it. That's the September 7th, 2017 low. So to me right now, in the financials, you'd see 213.14 is the first test. And I think you've got a pretty good chance of getting it as long as this market continues to show weakness. What else is going to be? Okay. Let's go ahead and look at any. Got any more emails here? Let me check. Let's go to Morgan Stanley real quick and take a look at it. This one looks, or did look, a little bit better until a couple of days ago when this thing did kind of blow out the previous low of 15.7 million shares. That takes us back to the $49.77 low from February 9th that got spiked down into. As I said, 15.7 million shares, hit that with 26 million shares 2 days ago. You don't have a lot of volume out here, but you've already basically into that damage with the two previous lows just on the high 49s with much higher volume. So I don't see anything changes in this. And again, want to thank Larry Pesavento this morning talking about counterparty risks in Deutsche Bank, which we can take a look at. I did have an email that I think I already answered, but I'll answer it again here too. And that question is, this whole thing together, any kind of surprise to see that the government came out today and said that there may be problems here, at least in the United States, with Deutsche Bank. And like I said, you know what? My guess is that President Trump probably watched Godfather 2 a number of times. Or was it Godfather 1? Where he took care of all of his business on the same day. If you remember the movie, he wiped out all his competition in a single day. I would not be surprised if, I know he's a big fan of that movie, if he didn't think about how he could basically put all this stuff together and push it out on the same day. I always loved that baptism theme. Always looked good. Got a couple more people where we're going to be looking at AAOI and LABU, a couple other things, Godfather 4. But we'll be back in a minute.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And had a question in here from Mike in California asking about what's up with AAOI. These companies, and we're going to see it, I was going to talk about it in Snap too. It is not uncommon to see, especially at the very end of where these markets start to break, that the most heavily shorted stocks are literally so short that they can't push them down any longer. People have been piling on AAOI since the bottom. We bought it and took the run to $30. I think if you remember, we talked about buying I think the calls on that one. Can't remember what I did now. Can't remember much anymore these days. Did make a lot of money on those. Nice pop up to 30. I think we bought it at 24 and it went to 30. We bought the calls, I think the 25s at $1 and got a lot out of them, $4 or $5 or whatever. Anyway, what happens, and it's not uncommon, is to see these stocks, especially in light volume going into 3-day weekends, see a lot of shorts pile up. And today, yesterday, you see the counter trend in the market or market start moving lower. And the people that have the shorts, the easiest thing to do when a stock can't go down, because literally there are just so many people short. If you can't get anybody to sell at that point, stock's going to go higher. And as soon as you get a whiff on Wall Street of a bunch of people on the opposite side of the market, these stocks really start to rip. This is a good example of it. Monster shorts. This one has been kind of in the most hated segment. No, I did not get this one. Snap was the other one. It's starting to move, doing the exact same thing. I started to kind of talk a little bit about it, but there are kind of like two phases. We started talking about this maybe 10 days ago when we started seeing stocks like here. These are the kind of things that you start looking at and you start going, okay, stock goes from $2 to $20 in a matter of days. That's kind of the first phase of it. The second phase, when markets start to pull back, are a lot of these heavily shorted stocks that tend to go against the direction of the market, which drives people absolutely batty. We're down 20 points on the S&P cash, or we're down 30 points on the S&P cash. And this stock that everybody's short doesn't go lower. What does that tell you? It's probably going to go higher, and you're probably going to get run out. So you need to be able to know that when you're in these particular stocks, that opportunity certainly presents itself. You want to know how short you are, but you also want to watch every day. You're not going to catch these stocks because they don't advertise a lot, like Turtle Beach is here. There was a handful of other stocks that week. But that's kind of, you start listening to that stuff, and it's not going to happen the next day. But you're going to start seeing all these stocks like go from $2 to $20. Then you're going to start seeing the market pull back, and you're going to see heavily shorted stocks drive much higher. In fact, we shorted one yesterday. Went a little higher in the first part of the morning, but it was up 50%, and it was one of the stocks I wanted to go long, and it was a very tough position to hold. Didn't end up holding it, but it ended up going up 50%. Now all the shorts are out of this thing, and a pretty good move on the way already back down. These same stocks that have these big short squeezes will probably have fairly decent pullbacks, but you got to get the shorts off your back in these, and you don't. Now, Tesla, kind of a good example of, pretty big day, last couple of days, pretty bad news. You still can't get the stock to go down. And I wouldn't be surprised that the S&P goes down 50 or 60 points, or you get 100 or 150 points lower in the NASDAQ, and people are still staring at themselves being short Tesla. When you have perpetually 30 or 40% short, there just aren't that many more people to go out there and force out of the market. You almost have to have somebody like a CEO or a CFO get indicted or kill somebody, or literally it has to be something happen. Generally what will happen is that shorts get run out, and once everybody's done shorting the living daylights out of these stocks, they will turn around and come lower. But in fact, let's see what it's been. I didn't look in the last couple of days. Let's see what Tesla's been doing. Okay, yesterday, the day before, 25% of all shares traded started as short position, so 1 in 4. Day before that was 22%. Day before that was 25%. Everybody, it's the old watch, the pot that you won't boil because you're watching it. And that's why I tend to, like I said, you're probably going to be 3 days, 3 weeks, 3 months early. And I wouldn't be surprised if Tesla is one of these stocks that makes it through pretty unscathed through the summer. Everybody quits shorting the thing, goes back up to maybe 310 or 315, maybe in late summer or the fall. And then one day you just wake up and it's down $50 and it never quits. That's generally the way that these things work. They make you, if you're going to be, if you're a big man on Wall Street, you don't have to show profits tomorrow. You're not thinking about profits tomorrow. Then you just sit on it. What's the guy's name that short this thing? That was short Enron. I'll think of it in a minute. Oh, we've got Sad from Denver. Oh, no, we don't. Okay, good enough. I'll get it when we come back from the break. What else do we have? Okay, anyway, just on my soapbox there of if everybody's short, you're probably on the wrong side of the market. Chanos, thank you very much, John. Anyway, Chanos is not going to feel bad about it. He's probably got puts on this thing at $150 for next year. And he probably paid $1 for them. And he's more than willing to sit on these things. And if those don't pay out, you know what he'll do? He'll buy puts for the next year at $150 and pay $1 for them. And eventually, may not be Tesla. It'll be a handful of things that he's short. Stock will go to $40. He'll make, 9,000% on his money, and he'll be happy. But you've got to have a lot of patience when you're short these stocks. The last reporting period came out on the 15th of May. Tesla was short 31%. So generally, I was taught when I started trading, I think Tom says the same thing, around 10% is you don't want to be really into a stock that's got more than 10%. Everybody's already got the same idea as you, and that makes it kind of a horrible idea. I'm not that bad. If a stock goes up 50% and it was short 30, I'm assuming that a lot of those people got out of the way. And if I don't see people piling in each day on the individual daily numbers, I can make a pretty good indication that the market's ready to flip along with that stock. But man, do you have to have the patience of Job.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Wanted to take a look at Keys, Keys. We've talked about this a few times. 5G, a lot of the technology is much higher frequency. A lot of other things that mean that you're going to have, if you're going to develop new products for 5G and sell them to Verizon and Sprint, all the other guys that are going to be knee deep in 5G, thinking they're going to make a ton of money selling services off of it. Keysight had a huge, nice spike today. This gives you a pretty good indication that they're selling a lot of this equipment, and I suspect it is for what is the equivalent of the computer upgrade cycles that used to happen. You know, when the next version of Windows came out, you'd always have to get the newer computer. And of course, that meant you needed new hard drives and new monitors and new everything. Well, that's kind of the same thing going on, or we've been waiting for. What this tells you is that whatever the time span for development for the product is, it started now. So if you're thinking maybe they can kick a product out in 6 months or 9 months or a year, depending on who the company is, that's it. So we've seen the signs here, and that is that the companies that are building 5G stuff are willing to go out there and buy it. Nice consolidation in Keysight. This tells you that you want to be thinking, you know, if they can kick out products in 6 months, I think that's probably fairly tight for 5G, probably 9 months. So if we're talking about now, we've been talking about the first couple of months of 2019 as the big time where 5G equipment really goes into full gear. I mean, there are some people selling 5G stuff already, but it doesn't have a lot of the new features that these things are going to have. Yeah, there's 5G now, but my understanding is that we're going to, isn't it 300 gigahertz at the high end for 5G? That may be 10 years down the line, but yeah, 40 gigahertz and higher means a lot of that equipment could be coming on. Anyway, this is one of these things. It took almost 10 years to get to the top of the cycle for 4G. So, you know, if you're looking for some nice investments, we're starting to see the first kind of green sprouts in this part of the business, which is all the test gear that goes into getting these things built and FCC certified, because of course these things are all radio communications equipment that have to go by the FCC. So you got to spend a lot of time making sure these things don't send out spurious signals, as the FCC likes to say. But a good indication that you're starting to see something here. Keep an eye on Keysight and other companies in this area. Same thing with AAOI and some of these other companies that are kind of on the fringe parts of this business. We're going to need faster, literally faster everything. And the way I've said this before is, in fact, somebody asked me just yesterday or the day before, they were looking at a used car, and they're going, okay, this guy did a few things to the engine. I said, okay, well, he did all the stuff to the top end of the engine. That means that you probably really need stronger rods, better pistons, and of course, you're going to need a better clutch for that transmission, and the rear end can't handle all that new power, so you need a new rear end. And of course, you're going to go faster, so you need better brakes. That's kind of the ripple effect of exactly what happens in these businesses. Once you start really breaking the edge and going up in orders of magnitude frequencies, these things ripple on out in literally everything from your design process, the software that you have to buy, the equipment you have to test it. And this is where the magnification effect of a lot of these stocks have been there. In technology, the social media stocks have ruled for a long time. Those things look like they're kind of coming in to a pullback. And my guess is, as we look 2-3 years down the line, the big winners are going to be, as just the gold mine was. The people that made the most amount of money in the gold mines were the people that sold the jeans and sold the shovels. This is kind of the first line of that. Then we're going to get into people actually selling the equipment to Sprint and those guys. And then at the end, of course, it's the people like Sprint and T-Mobile that actually collecting all the money. You get 3 different parts of, or 3 different times in the market. And right now, it's the development phase of these products. We'll move into the people that are actually selling the products. And lastly, it'll be the profits dragged in by the big companies. Those companies will probably, like T-Mobile and Sprint, will have to spend a lot of money up front, and that will probably make keep kind of a lid on those markets for those bigger companies for a while. But Keysight, the development companies now, 6 months from now, look for the companies actually selling the products. And the reason that they bought these products from companies like Keysight, and then 5 years down the line, you get the big move out of Sprint and T-Mobile and all those other companies once they've been able to amortize all that huge amount of equipment that they need to have. Yeah, it's microwave connectors. What is that? Amphenol. What's their symbol? I don't know if they sell many. APH. Let's take a quick look at them. APH, which is a one of the biggest connector manufacturer. The symbol is APH. This is another good one to keep an eye on, because these guys, especially at the very beginning of product cycles, and everybody wants the best connectors, and eventually they're made in China for half the price. But at the beginning, these guys kind of set the standard for a lot of connectors, stuff going on. Doesn't look bad, actually. Certainly not having a bad day today. Oh, and Molex. Yeah, that's interesting too. They're a good connector company also. Anyway, a lot of ideas out here. Yeah, yep, certainly a lot of people made some big money on those. So you can keep an eye on all that stuff, and we'll keep an eye out for you. Just some ideas out here. Okay, other stocks that I've been looking at. We have enough time, 1 minute. Was looking at Restoration Hardware. This thing was going into its previous highs. Got back into, let's get this back up here. Got back into the high of January 24th at 105.46. That was with like 1 million shares. Got into that with 800,000 shares a few days ago. But what I this is one of these that didn't have a huge pullback in energy on the way up from this March 19th low, but certainly it was kind of interesting to see Restoration Hardware have the run it did. Now, these 109s, 105s, these things are kind of petering out on the move back up. I was kind of very interested to see how this one was going to do today, and it kind of told us everything we needed to know, which is the housing business probably not what it used to be. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I did want to bring up Platform Specialty Products Corporation, PAH, is on this. 9 days to cover. And the question is, can you look at this moving up with volume? One of the things that you do like to see in these heavily shorted stocks, if you're looking for rips on them, and short squeezes, even in a down market, and sometimes they're even more vicious when you're on the wrong side, is you don't want the volume picking up too much, because basically that's it. When it's the equivalent of yelling fire in a crowded theater with just a couple of exits. And that's, if you're going to make the money on these things, that's what it's all about. But 9 days to cover the last reporting period. So PAH, you might want to put that on your list of other stocks that you probably certainly don't want to short. And, for some day trades out here, this is back up to the previous high. The volume's going to kind of come in about the same. Probably going to still see a lot of these highly shorted stocks have a few more days on the way up. Just to recap the show, if you're just tuning in now, I suspect that we could see some politics come in to the market here over the next 30 days, probably through July 4th. Going to try to get everything done and out of the way on trade, on immigration, on a lot of these other things before everybody leaves for the election season, which is what, about the 15th of August, I think. They get done and they leave and go back and campaign because, of course, if you're in Congress, you got to do it every 2 years, right? Only the senators get a little time off before election cycles. So they're going to have to be out of there kind of in August. If you want to get all this stuff done, you got to stir the pot right now. And I don't see how anybody's going to want to dive in before that much of it. So I think you could have 30 days of a decent pullback, see how that works out. I am for it. So see how that works. Anyway, in the meantime, sell or short when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.